Silver has just experienced a move unlike anything I've seen in precious metals in my 3 decades as an institutional trader. As indicated in my previous video from last weekend, a reversal was highly likely, but I didn't anticipate the extent in such a short time. You will find that video's link in the description and in the comments below. Now, let's discuss what happened and compare this reversal to past parabolic price rises in detail, and consider what this might mean for silver's direction going forward, and potential spillover effects to the other asset classes. Let's have a look what happened to silver at the end of the week first. After spiking during the week from already highly elevated levels, silver sold off sharply on Friday, at one point dropping nearly 40%, testing the 50-day moving average around the future settlement window and closing roughly 30% below its highs. It is worth noting that implied volatility in silver options had already begun to reprice over the course of the week preceding the reversal, after I pointed out in last weekend's video that put skew was mispriced and implied volatility was, in my view, far too low. But back to the silver price itself. Let's take a closer look at the intraday action. Looking at the intraday price action, silver experienced persistent selling pressure throughout the morning session. What stands out, however, is that the downside momentum accelerated shortly after 12 p.m. Eastern. This coincided with the emergence of a significant imbalance in the trade at settlement or TAS order book ahead of the daily future settlement at 1:25 p.m. Eastern Time. That imbalance was most likely driven by margin-related executions at the settlement price, as well as gamma hedging flows tied to OTC derivatives expiring into the settlement. For those who may not know what trade at settlement is, trade at settlement, often called TAS, allows traders to buy or sell futures at the official settlement price of the day. Instead of choosing a price, they agree to transact at whatever price is set at settlement, which is why a lot of volume and imbalances can build up right before that moment. What's interesting is that the price dislocation in silver futures, driven by the TAS order book imbalance on Friday, was large enough to create a temporary price distortion so that an arbitrage opportunity opened up between silver futures and silver ETFs shortly after 1 p.m. Eastern Time. The ratio reverted back after 2:45 p.m. Eastern. But let's zoom out again and look at similar historical silver price extremes and what happened afterward. Let's take a look what happened during similar parabolic moves in the past. Comparable moves occurred in 1980 and again in 2011, both followed by sharp reversals. In the 1980 reversal, silver fell by roughly 30% over 10 trading days. Notably, a sharp sell-off occurred around day 5 of that move, followed by 6 weeks of range-bound consolidation. Only after this consolidation did silver establish a new directional move. The 2011 reversal painted a similar picture. Much like the 1980 reversal, the 2011 move involved a retracement of roughly 30% within 10 trading days, notably again with a sharp sell-off around day 5, and again followed by approximately 6 weeks of range-bound consolidation. Extrapolating from the 1980 and 2011 reversals to the current market setup and assuming similar behavior, one possible scenario is another sharp move lower toward the end of this week, followed by continued two-sided volatility into mid-March. Only after that might the market transition into a more range-bound, lower volatility phase toward the end of April. A critical difference in the current market is the speed of the move. What took roughly 10 trading days in both 1980 and 2011, a 30% correction from the highs, unfolded this time in just 24 hours. The key takeaway is that markets are repricing much faster than in past cycles. That doesn't necessarily change the broader pattern, but it does compress the timeline and does increase short-term uncertainty. And historically, moves of this magnitude often have a contagion effect on volatility across other asset classes. We for sure have an interesting couple of days ahead. If you enjoy this type of content, you may want to subscribe. Thanks for watching.